Stock picking is in the same category as active management, but it is a bit more narrow. It involves active management of individual equities in particular. Generally speaking, active management is the process of managing investments with the hopes of beating a benchmark or market. This could involve doing it yourself or using a fund manager. But you or a fund manager could use stock picking to choose the individual securities in your portfolio. Stock picking can be very time consuming. If you are trying to pick a stock that will do better than others, not only would you want to look at the company's fundamentals, such as their balance sheet and cash flow statements, you would need to analyze its competitors to see how they stack up. You would also need to make judgments about the management of the company, and then you would need to keep track of developments in that industry, the markets, and the overall economy. Of course, there are many stock pickers that only rely on internet forums, newsletters, or blogs for analysis. They may not truly understand how to think about company valuations, but may come to trust the opinions of the people they follow. They may end up buying stocks because people around them are excited about the stocks. This is quite common. The emotional aspects of stock picking are important to consider. When buying individual stocks, you may find that you become attached to the stock and interpret information differently. For example, if you bought a stock that has a sudden drop in price, you may easily find opinions from experts and amateurs alike with opposing views. Some may build a case that the company is performing well and the market is underpricing the stock. Others may build a case that the company is faltering and that the stock price could go lower. You may find yourself placing more weight on one general opinion over another. That's human nature. It's known as confirmation bias. We tend to seek out opinions that confirm our beliefs, and we tend to discount dissenting opinions. Our emotions can cloud our judgments, and it's something we need to consider when it comes to managing our investments. Many investors start their investing journey by buying only a few stocks. That's quite common. The focus might be on just selecting one stock at a time, but it's worthwhile to take a step back and look at your overall portfolio holistically. Are you concentrated in only a few holdings? Are you diversified across different industries, countries, and asset classes? If not, you may want to think about how you can apply the principles in this course to build out your portfolio. You can still be aggressive if you want to be, but holding concentrated positions in only a few companies or from only a few sectors can be excessively risky.